Hello, everyone. Welcome to another live analysis. So, obviously, uh, today there are a lot of things that we need to discuss. Okay, I'm here to go through a monthly wrap up, as the title says. But after some news this morning, and as we are expecting the Fed's favorite inflation, I'm referring to the PCE, personal consumption expenditure. We're gonna try and go through those first, obviously, because we are expecting to see the markets extremely volatile, especially as we move on into the US market open. So, obviously, I'm gonna share as well my screen, but before we see any charts, okay, I would like firstly slowly um to explain a bit what we need to where we need to pay attention first, because today I don't know whether you're following the news in US, but other than the economic calendar, other than the US personal consumption expenditure, that will be a very significant indicator for any further signals regarding the timing of the monetary policy easing. What happened this morning is Mr. Trump. Okay, I'm sure you heard about it, or you've seen some headlines about Mr. Trump, but it's quite important to see how the markets could react. So this morning, actually overnight, was it to be more precise, we have seen that Mr. Trump was found guilty on all 34 counts of falsifying business records. It tended to influence the 2016 presidential campaign. Okay, so it's very everyone actually expects to see what will happen with these presidential elections, obviously. But Trump will obviously appeal the verdict and will be sentenced on July 11th and faces up to 4 years of prison, as I can see over here. And in general, we have seen that his other than what is happening on in the court, obviously, is crucial, as I said earlier, to see the reaction of the financial market. Is not clear for the financial markets what will happen with the US presidential elections. So we need more clarity. For sure, the US presidential elections is likely to be to, let's say, ushering a bumping end of 2024. We have seen the VIX index, the fear index, that like rebounded and extended higher. Is the index. I'm not sure whether you are aware, but is the index that presents the fear that there is currently in the market. So it seems that the market participants are already preparing for the risk of stock market swings around the November vote, other than the PCE that's coming later on. But yeah, so one hand is Mr. Trump, okay, and the fact that he was found guilty. Now, as I mentioned, let me share also my screen as well. I know that you want the gold, Simeon. Before I move on to gold, to be honest, okay, let's go through at least briefly the stock market. Okay, this is the S&P 500. Okay, in general, we've seen the US futures to the downside the whole week. Okay, one hand is the anticipation of what I said, the PCE, but on the other hand as well, is also Mr. Trump, but is the month end, is May's end, is the very last trading day of May. So new month next week. That's something that also attracts a lot of profit taking conditions and practices, as you already know. So a lot of especially institutional players, professional players have already started repositioning themselves ahead of the new week, or taking proceeding with the profit taking practice, as I already mentioned, by closing their position, especially after all these news, and after also and due to the fact that we're waiting for a very important economic release. So in general, futures are on the downside globally, not only in the US, okay? So have this in mind, it has been under pressure. If I put the daily chart on, you can see that we are facing a 3 consecutive bearish day so far. We are on the third. You can see that's the very last, actually the current performance, with a quite steep correction. So it's a lot of factors, okay? The so far earnings disappointments, the Mr. Trump, the anticipation of the inflation report in a bit, which might be a potential turning point, by the way, for a market, for the market expectations regarding the rate cuts as well. So let me share the economic calendar as well, okay? I expect bearish forces. Dollar, Dow. Hello, Simon. Gold. What pair is this one? My bad. This is S&P 500. Okay, this is the stock. But since Simeon already asked about gold, even though it's a bit choppy, but let me zoom in the 1 hour chart at least. We have seen that it's moving sideways. Okay, I haven't started hands-on yet. Okay, I haven't started. Please stay tuned. So as I was saying, I was about to say, sorry, my bad. So we've seen gold sideways in general. So the whole week, this is the week's performance, right? 1, 2, 3, 4, 5, 6 days in a row. That was since last Friday, sideways, but was held actually above the 2300s. Okay, I will zoom in. In general, guys, the overall picture, the overall picture, the long-term picture and medium-term picture suggests that steel, commodities, precious metal are well supported by geopolitics, by the delay of the interest rate cuts, and then the Chinese demand as well. If you are following us in social media, you might have already seen my latest gold video regarding how to trade gold at its record highs. Okay, so it's still supported in the overall outlook, in the medium and long-term outlook, because the fundamentals haven't really changed significantly. Okay, and remember that is a yield-related asset, so a weak dollar could support further the gold. Now, because we're just 10 minutes away, okay, this is gold. I will zoom into gold, okay, in the 1 hour chart. And this over here, you can see that is held above my pivot point at 2339 level. So it's held above it and it's consolidating since overnight, basically. Okay, so it hasn't changed. It's sideways, and what they will actually could throw, let's say, a spinner, okay, spanner in the works for gold, it will be the inflation in a bit. Let me share it as well. But since we don't have the since you need to prepare yourself for the inflation figure, it's clear over here that the pivot point could act as a nice immediate support level for the gold for gold intraday. This is the 1 hour chart, and if I just move on to the 30 minutes chart, guys, I've spotted that is in a descending triangle. Have you seen this? So sorry for that. Just one moment to fix it. So by connecting the highs, just to be more precise, yeah, it forms like a triangle. We could claim that it's a flag. So a break to the upside, okay, could resume the upwards momentum with the asset facing a resistance level at 23.55. But even only if we see a nice decisive breakout of my trend line over here, or even more precisely of the Bollingers, if you're using Bollingers, okay? For the time being, is sideways, is ranging ahead of the data. On the flip side, very first trigger point will be the bottom of the triangle and the pivot point. Now, allow me very, very quickly to share my calendar, okay? Because we are very, very close to the sorry for that, very, very close to the release, okay? So I would like to explain a bit. Okay, here we are. Can you see it? Yes, you can. Perfect. So I would like to explain why the PCE today is so important, okay? So the personal consumption expenditure, right? It's very pivotal because it gives, it's a reading, right? It presents the sorry it presents the spending, the consumption. So it's an important we might consider it as a more important indicator than the inflation, okay? Because it includes a look of the Federal Reserve's preferred cost of inflation, okay? So a hotter than expected, so a bit, let's say. Are you following me? I saw that you're talking about. I saw that video you're talking about. Okay, Hanson. Okay, hopefully it was helpful. If not, I will move on to a more in detail one. So why this is important? Okay, why in few minutes, in 5 minutes to be precise, is important. So, as I said, its finding will give us a clue whether the Fed will delay even more the interest rate cuts. Interest rate cuts imply to weaker dollar. So the more they delay the interest rate cuts, the stronger the dollar will get, not weaker. If we see that today the data support an earlier rate cut, that could weaken the dollar. Now, if today we see a hotter than expected number, so a bit of the forecast. Remember this line over here, this column over here is the expectations, the forecast, the market's forecast. So if we see a hotter than expected number, it could support further the higher for longer interest rates scenario. So we'll support that the Fed shouldn't proceed with the rate cut anytime soon. So, given the inflation, the so far inflation trajectory that we've seen, okay, we know that eventually the Fed must cut rates, right? But it's the timeline that is the trigger. It's the trigger point. So the focus is on the core over here. That's why it's highlighted with the red. Okay, is the most important part, let's say, of the today's report, because it strips out food and energy prices. So, sorry. So, a bit could, as I said, indicate higher inflation, so could shift, postpone even more the rate cuts. A missed or in line, it should suggest that there is that the inflation will not stay higher for longer, and that could change everything basically. So theoretically, okay, theoretically, we should see the dollar weakening if we see a mist of the a mist in the results today. Okay, that's the thing that I wanted firstly to highlight. Are you okay so far? You're saying Joseph, Joseph sells buy gold. It's not as simple as buy gold, okay? Because indeed we have the PCE is expected to add a significant volatility into the gold. I'm gonna share the screen right now because we don't have a lot of time. So let me share both. Okay, let me share both. Screen. So I want this, and I want the economic calendar as well, side by side. This is gold in a 30 minutes chart, guys. Gold. So I'm gonna share. Please, gold. Okay, I have it over here just for you to see what I'm covering. I have also the data just to see how the market will react. As I said, come on, right? Where is it? We have another minute to go. Okay. So just to see how the market will react, as I already mentioned. So obviously, it might be not as simple as buy gold, sell. Buy gold or sell gold and etc. Because other than the PC, we have OPEC over the weekend. We have the end of the month. So the market participants might held for any entrance into the market for the upcoming week and the new and the new and the new month ahead. And we also have, of course, the US Open, with which we are waiting to see how Trump and the PC, why not, could affect the markets as well. So okay, there is some support, but the data are not out yet. This is a 30 minutes chart. Everything has been flattened. Everyone is waiting for the news. Very, very choppy performance until we have this data out. Okay. Core, the monthly core personal consumption expenditure missed expectations. Where was that other one? In line. That's a good reading, guys. That's a good reading in regards to the economy. Okay, so that could actually suggest that could actually suggest that the Fed could consider an earlier rate cut. So that's actually what the Fed wants to see. Okay, they don't want to keep the rates higher for longer because this is risky for the economy, risky for the inflation, and etc. So that's something that it could be a very positive, positive release for the Fed. Okay, 0.2% and 0.3 expected is the core personal consumption expenditure, which excludes obviously the food and energy. The year on year, the headline remains unchanged, which is still good. I'm saying good, meaning that we're gonna slowly see the central banks start easing, right? Because that wasn't the case for the Fed so far. You remember we started the year with a 150 points rate cuts, and we are already entering June. Nothing is changed because the data weren't supporting that is a right time for an easing, for cutting interest rates. But this is quite promising. Remember that any indication, especially ongoing indication, that Fed could consider cutting interest rates, it's negative for the dollar, okay, because it's an easing of policy, cutting interest rates, but very positive for gold and for stock market. Okay, lower interest rates is good for the corporate sector, it's good for the stocks and the precious metals as well. Uh, so I'm gonna check later on the breakout of the breakdown, sorry, not breakout, the breakdown of the PC to see whether there is anything else that we should have in mind. But let's now focus on our data, on our chart, sorry. And you were actually right, but I cannot, guys, I cannot advise you what to do. What I already mentioned is that key trigger points, key resistance levels, if you were here from the very beginning, for gold intraday, the immediate support levels is the top of my triangle and the Bollingers. This has broken, but this candle has not finished. I will move on to the 15 minutes chart just for you to see. It has broken it has exited above the triangle. So if this candle, we have a candle, okay, that depends obviously. Let's wait. That depends obviously on the strategy that you are following and which time frame you're trading. But a, a strong breakout of the triangle, which is what happened just now on the data release. If this sustains, okay, if this move sustains, if this gains, if the gold managed to sustain these gains, then the next important resistance level is the 2355 level, okay? So have this in mind. And something that also helps is to measure the body, the core of our triangle, just to see, yeah, look at this beauty. Indeed, that satisfies once again that the 2355 is a nice resistance level for gold because it's also, I measure it, okay, I use Fibonacci to measure the length, the body, the beginning of my triangle, right? And then I move that into the breakout level that was this one. Let me zoom in so you can see it. See, I move it over here on the breakout of the trend line just to see how far it could eventually go if indeed it closed positive and is in line with the resistance level, based on my pivot point analysis. So indeed there 33.55 is a nice strong resistance level for 23.55.70 to be more precise. Is a nice resistance level for gold if indeed the gold confirms a bullish breakout of my triangle and is in line with the fundamentals for the time being as well. So um, so just for everyone to be aware, okay, if this move continues, okay, as I said, 23.55.70 is the next resistance level, and the very next one is the top of the week, the highs of the week at 23.62 level, okay. Overall, the momentum, not overall, actually, the momentum, as you can see intraday, is positive. RSI is already above 60 and keep rising. Can you see that? Or am I, my head is hiding it? No, it doesn't hide it. So over here, RSI points further to the upside, but in general, if you connect the lows, you can see that the momentum started to be bullish since yesterday night. Okay, the same stance. Sorry, this is my stochastic. RSI as well. It turned above 50 since yesterday night as well. Actually, yesterday morning. So there is positive momentum. This positive momentum can be seen also in my indicators over here, but you need to wait for confirmation. You need to wait for your at least for the session to close. I mean, if you are trading in a 1 hour environment, so wait for that one to close. If you're trading in a 30 minutes environment, wait for confirmation once again. Okay, nothing has changed for the time being. We cannot really um, um, uh, 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 we cannot really tell whether there is an ongoing and increasing bullish bias as long as we don't have a confirmed closure outside the triangle. A very useful setup is the Heiken Ashi as well. Okay, this is the gold once again, but using Heiken Ashi. 30 minutes chart, Heiken Ashi. And look at that. Look at this beauty. Once again, it's a triangle. Indeed, it has broken it. Indeed. But Heiken Ashi, as you already know, as you might know, to be honest. So that's the trend line. Indeed, broken it. But in Heiken Ashi, if our candle has both lower and upper wicks, it means that there is still uncertainty. It means that the bulls and buyers and sellers are still fighting, and there is no clear momentum. Okay, so indecision, 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 and this is not clear either. Okay, so wait for confirmation. Wait to see how this candle will close, and to be more precise, wait for a bullish Heiken Ashi candle without any tail at the bottom. If you see tail at the bottom, it means that something, the momentum, it is not, it's somewhere in the mid. I mean, okay, you need candles without any tails at the bottom if you are using Heiken Ashi. Okay, now feel free to ask anything you want. Okay, guys, I will turn the bid into the dollar. Okay, but I can see that the only people that ask about analysis ask that only about gold, and there is one is ARMS that ask about Dow, and I will be there in a bit just to confirm the dollar weakness. Indeed, that the data finally we could say that they support easing, Fed easing, and that's why dollar weaken further on the release. Okay, I'm not saying that we're going to have a rate cut next month or something, but as you know, markets are always ahead of themselves, and we could, if of course next week's data uh, support further this scenario, we could see the dollar continue to the downside ahead of due to the expectations for a rate cut. Okay, so dollar already broken the first support of the day at 104.45. One swing down, correction, another swing down. So let me just, so sorry, just I'm doing some just to see. So this is the decline that we have seen since end of March. So it's in a down channel. That's the daily chart in dollar. Let me update the headline. Where's the caption? Caption. US index. Safe. Okay, I think you can see it, no? Yeah, you can see it at the bottom. Perfect. So, this is the dollar, okay? Daily chart. Daily chart. It had been to the upside the last 2 weeks of May. The last 2 days, though, because it's the end of the month, because it was anticipation of the PCE, a lot of profit-taking conditions have been, profit-taking practices has been seen. We have seen for 2 days, that's the second day in a row, the dollar declining, but still above the round 104 level, which is somewhere here, and the last week's support at 104.23. So that's a nice support range, okay, for medium term traders or long-term traders, because a break below this territory could suggest the resumption, actually the continuation of this nearly 2 months down channel further to the downside. Okay, now let's zoom in intraday. So up, up, bump, sharply down, significant sell-off since the past 15 minutes that the data have been released, right? First support was already broken. The very next support is at 104.20, while a break of this level 104.20 could open the doors further to the downside and to a potential break of the round 104 level for dollar. So clearly a bearish outlook intraday for dollar. The moving average, the intraday moving average, as you can see, keep pointing further to the downside. That's a very massive bearish candle. The RSI entered already the oversold territory, but it's still pointing further to the downside for the in this very short time frame. This is a 30 minutes chart, okay? 30 minutes chart. So there is some further room to the downside. Stochastic the same. Another, oh, you cannot see that. How can I, let me, so what shall I do so you can see it? Why? I could just, move this a bit. Yeah, perfect. Here we are. Can you see stochastics over here? It's my indicator for the intraday setup for fast environments such as 30 minutes chart, 15 minutes chart, or an hour chart, depends on the currency, on the asset. So lower highs, lower lows, another bearish cross indicating that there is further selling pressure into the market. Next support 104.20, and if we see the asset extending declines below 104.20, that could open the doors to the round 104 for the very short time frame. As I said, for a higher time frames, this is a very important zone to be closely monitored, because if the 104 breaks, okay, that could open the doors further to the downside. That will suggest the continuation of the channel and could suggest a move down to 103.20, 103.30, or even 103 territory. But we need to see the asset extending below 104. Now, questions, guys. Come on, questions. Let's see gold again. Let's see gold again. Call bearish below 2360. So you're saying that it could decline if it breached 2365. I'm not quite following there. I mean, you're right for one thing, because I don't understand quite what you're saying over there, but you're right on the fact that 2365, okay, I have a 62 over here, but yeah, 2365 territory is a very important resistance level. Let me show you why. It was the last weeks, actually the how long is it, the last 2 weeks, since on the 23rd, since last Thursday. Yeah, more than 1 week. It's resistance area. It's the high of the 5, 6, 7 consecutive days. Okay, it's a key resistance, and it's a resistance that if it breaks, it could, okay, come on, it could sign could resume, let's say, the bullish bias for gold. Yes, and and you are right if you're saying that if we see weakness at that level, we see a pullback, that could suggest a correction, but we're not there yet. It's at 2350, broken our intraday setup, our triangle, ready to retest the 2355. Momentum has changed. Bulls have joined the market. So indeed, the 2355 and 2362 are the very next resistance levels for gold, because the PC data support a strong gold. Both, Ahmed. For the core, both. The core, because it's excluding food and energy, okay? Because with the geopolitics now, we have anyway high prices in the energy sector. A nice and clear picture of the U.S. economy is by excluding the energy sector. So yeah, both. But if I have to pick, okay, one, it would be the actually cannot pick one. I cannot pick one. I could say the year one, because it's an overall, okay, it's a long term, but still they are correlated. I mean, the one is the average of the other. I mean, so both. both are important. There is a lot of market participants are weighing a lot on the headline, so on the yearly one. If I have to be more precise, so Dow as well. So gold is okay. Dow. Yes, of course, Dow. Okay. As I said, stock market has been. Oops. Should it be here? Okay. As I said, stock market. This is a daily chart, by the way. I'm gonna zoom in, and it looks like an M. Can you see that? And it looks like an M. Tuk tuk. M. Or a W, someone could say. Yeah, that one, that was like a W, but now we could see that it's like an M pattern. I don't know how many of you are aware of the M pattern, but in an M pattern, let me draw it a bit. Whoop. It looks like an M pattern. This is the daily chart. Okay, I'm starting from the daily, and I will move on to the to the intraday one later on. So this looks like an M pattern. So a breakout of the neckline of this M pattern. So the neckline is at the bottom of the oops, basically here. Okay, this is the the neckline. Okay, a break of the neckline it confirms a bearish long term outlook. Basically, it could confirm the beginning of a downtrend. However, we are far above still the break of this neckline, and considering the fundamentals, okay, uh, we might not see such a breakout, but having in mind, okay, so stocks in general, as you can see, have had a very weak, let's say, week. The last 2 weeks have been in general under pressure. So yeah, I've been to the downside in general. And just to and it's basically the reason for that is the risk of flows out of the why we have seen these risk flows out of the equities of the stock market. It was this month end demand. It's very important because it's not just the end of the week, it's the end of the month, but along with dovish comments from Fed officials. Okay, these Fed officials, end of the month demand, data, treasuries have boosted. These are factors what is responsible for the decline, for the plummeting of Dow, of Nasdaq, of S&P 500 performance the last 2 weeks, along, by the way, something that I forgot, along also with the earnings. There have been, if you remember, there have been some disappointing earnings releases. It was Salesforce, it was Dell, if I'm not mistaken. We had the slow GDP number out of the US earlier this week, also adding further pressure. Um, and yes, sorry, my bad. I forgot about it. I don't know whether you have seen the attack in ships in the Red Sea. So something that also added pressure on Nasdaq, S&P 500, Dow Jones in general, the tech stocks, has been the reports that the US is restricting licenses to chip makers, okay, for AI chips, for AI accelerators, plus the attacks in the Red Sea, but mainly the fact that the US, in order to support their economy against China, the competitive China, and other Asia countries that are producing chips, right? Nvidia as well. It's a US company, but there are a lot of materials coming from the Asia region. So US has announced, let's say, um, some it's restricting basically some license given to chip makers that produce their chips, they're manufacturing their chips abroad. Okay, so this affected the tech sector because it was affecting the AI shipments, the AI accelerator shipments, and that's why we have seen all this fear around AI pressure in stock market as well. Very very important announcement, basically restriction, and very important negative impact for the AI technology that is the one that is driving to the upside the majority of the tech companies. Nvidia has seen 300% rise in its price because it is right now is the number one chip maker in the world, right? So yeah, so my dear friend, a very important neckline over here. Have it in mind, put a line on just to remember in case within June we see a breakout of that level, because it will be a bearish signal. Now let's move on intraday to see where we're standing. Okay, a very choppy sideways move. Let me put my setup. Okay, I've put my 30 minutes chart over here. It's moving in a ranging market since Wednesday afternoon. Is retesting right now the this upper swing, but it hasn't confirmed a breakout above this range. Momentum is quite weak, as you can see. Back this zero, but RSI and stochastic keep pointing higher. But guys, it's not clear for Dow, to be honest. Who asked about Dow? It was Masiwa in the beginning of the session. The Masiwa has retested the top, the upper line of this week's ranging market. However, this is also a key retracement level, so we need to pay attention and see whether that move was limited, and we could see it returning back into the mid or into the bottom of the range. So it's still in range. So yeah, overbought. This is the 50-minute chart, by the way. Overbought needs a correction, decline a bit because it needs to get back to the Bollingers. So and the momentum it is positive but not strong enough, you see. The stochastic were already flattened, RSI already flattened. So we need a confirmed break of the upper level of this 38,307 level, confirmed breakout. So to continue above it and close above it in order to suggest that we could see the asset, uh, um, retesting 38,480, but overall the outlook is weak, so that might be just a correction. Yeah, it's very overall is very weak. Masiwa overall is very weak, so this move, to be honest, looks a bit limited. Okay, it looks limited. It's struggling to break above this trend line, the upper level of the range. And as long as it doesn't break the ranging market, it doesn't go out of the ranging market, then this could be proven as a reversal point. So keep an eye on that. Guys, because of the regulator, I cannot tell you what to do. I mentioned earlier in this live the levels, the trigger level, the resistance levels. So you should decide by yourself. You should, because I don't know what you're doing. I mean, I don't know your time frame. I don't know your strategy, your setup, your risk tolerance, your risk and reward ratio. I cannot advise you what to do. Okay, you need to decide yourself based on your um, risk tolerance, strategy, and etc. But the data have been beneficiary for the gold because they support the need of rate cuts earlier than the end of the year. Okay. My pleasure. My pleasure. Oh, pound Swiss. Nice. Okay. Pound Swiss. Pound Swiss. Pound. Here we are. Gonna just, where's my Haken Ashi? Let's see, my dear friend. Oh, that's the 30 minutes chart, okay? 30 minutes chart, Ahmed, pound, Swiss. So, a rebound has started since Asia session, since this morning. Supported, corrected. Over here, we could see that this decline might run out of steam. So, my dear friend, you need to wait for a few. I don't know. By the way, what time frame are you referring, Ahmed? What time frame? Just to be straightforward. But for the 30-minute chart that I'm checking right now, I can see that there is a sign of a reversal, a rebound to the upside, but we need further confirmation. We need for bullish candles just to confirm 4-hour chart. Brilliant. Why not? Okay, that's still confirmation though, because you can see it has been in a preloaded, I mean in a long, it's been in a bearish trend since for the last 1, 2, 3, 4 this is the fifth day, so the whole week. Okay, but it paused, so it's moving sideways. There is a sign of a correction, but for the time being, over here it looks just a correction. So, but you see, there is in my high Kenashi, we don't have a decisive bullish candle. There are still wicks on both sides, suggesting that this is just the need of a correction. Uh, so in the 4-hour chart, it remains still in a bearish trend, in a downtrend. As long as you don't see this performance, like this one, bearish bodies with no tail. So this is not an indication that the downtrend is changing. It's an indication of a correction, nothing more, nothing less. Very interesting actually. So right now, it has already reverted more than 50% of the gains that we have seen since 9th of May. So it's halfway. That's why we have seen stabilizing at that area, because it's a 50% retracement level. Okay, it's a very strong support level. It used to be a resistance level as well back in April. Yeah, back in April. You see, it was this latest swing. Okay, so just for you to prepare yourself ahead of the new week and the new month. I broke something over here. Have in mind that a move below 155, so basically a move below the latest low over here, or some clear bearish candles that extend below 114.87. So breakout of 114.87 along with bearish candles, strong bearish candles such as these ones without any tail at the top, could open the doors to the 61.8 Fibonacci level and even to the 88.6 Fibonacci level. So we're referring to 1440 or even lower if this decline prevails. By the way, something's wrong with my just to fix 61.8, don't know, 61.8. Okay, so that's a bit higher. Okay, is this clear? So now, this is the 1-hour chart, my dear friend Ahmed. We have the very first bearish candle with no tail at the bottom. Okay, so that's the very, very first sign that the decline might resume, the downtrend might resume. Okay. Wait, let me check your question. It's a brilliant question, basically. So let me share it with the rest. Yes. So, okay. I guess you're referring to this rebound. This is the move that you're referring, or in general, why we have seen the pound Swiss to the downside, basically a strong Swiss against a weak pound. Remember, Bank of England is expected to cut rates. Another video that you will see, I think it's already out there, what is expected from central banks in June. So another video that I have produced earlier this week. So so uh, sorry. So as I wanted to say, the something is wrong with the. Sorry, something is wrong with the internet over here. So hopefully you can still hear me. No? Can someone confirm whether you can hear me still, guys? So we have fundamental news regarding the that support this move. Okay, a strong Swiss and a weak pound. First of all, from the pound perspective, remember that the Bank of England is expected to cut rates. So it's closer basically to cut rates, even though I think we have it next week, if I'm not mistaken. Mistaken, yes, I think it's next week. So Bank of England, first of all, Bank of England is really close to proceed with a cut. They left so far the official rates unchanged, right? It was the beginning of May, but they, along with the ECB, they are the ones that expected to proceed with an easing in June. And if I'm not mistaken, guys, let me double check this. I think Bank of England is next week. Let me check. Uh, Weird. Bank of England meeting. Okay, I cannot find out right now when is the next meeting. But I thought it was really, I mean, nearby, to be honest. So it was supposed to be the very first after ECB, if I'm not mistaken. No, my bad. According to the Bank of England website, it's on the 20th of June. Okay, so yeah, so the Bank of England is also in risk of easing in June. Okay, so this is adding pressure on the pound from the one hand. Okay, so from the other hand, now from the other hand, we also had some comments this week. Okay, thank you. Sorry, now I lost you. Okay, so yeah, now, so as I was about to say, so regarding the Swiss, now the Swiss has we have seen a significant boost on the Swiss after some comments this week from the CMB, from the president of the Central Bank of Swiss. That's why we have seen Swiss franc outperforming against the a pound, if I'm not mistaken, dollar as well. So it was after CMB comments, and I think, if I'm not mistaken, that we had even more comments this morning. Okay, if I'm not mistaken, further, basically uh, further comments we could say. So Swiss franc, it might be right now, but I could confirm that it might be this week might be its best. Okay, against the euro, against pound. So what we have seen is that, more precisely, the president of the central bank actually stated clearly regarding intervention of the currency, okay, of selling foreign, the prospect basically, it confirmed the prospect, possible action for selling foreign exchanges as the only way to support the economy. Okay, so basically they not confirmed, but they announced a possible intervention. This is what actually happened. Okay, it's not something new. It's not an action that Swiss bank. It's something that the Swiss bank is usually. It's something that they are doing. I mean, we have seen in the past intervening quite aggressively into the market, into the currency. Remember 2015, right? So, yeah, this is why we have seen Swiss being significantly supported against the rest of the currency. So hawkish comments from its president, from the chairman of the Swiss National Bank. Um, the statement regarding an intervention. So yeah, so this is what have boosted the Swiss, at least for this week, because the as you can see, this move started Friday afternoon, last Friday, but it extended on Monday. Okay, it extended on Monday. So apparently there might be some. There were a lot of. Uh, there have been some actions on the background earlier than the statement. So yes, it is fundamentally supported this decline. Okay, it is fundamentally supported, my dear friend. Let me see whether there are any further news. But because it is a nice, I mean, it's especially with it's a very it's a very trigger point, a very clear trend. Okay, very clear trend. Just stick on your technicals for pound Swiss. Nice support level, a confluence of latest high coinciding with the 50% retracement level as well. So mid of this maze rally. So rely a bit on your technicals, because we have a very nice strong support level over here. Okay, and already in the intraday picture, the rise has proven limited. Okay, it might continue choppy sideways because it's Friday, but you could find some trigger points, uh, possibly consider a pending order if you wish. It's up to you. Um, so prepare, let's say, for prepare yourself, doing your homework ahead of the new month. This move was limited. It started pulling back. So, however, confirmation about the beginning of a new fresh downtrend could be satisfied if we see the breakout below this range over here, this zone over here. A very nice asset. Thank you for bringing that up, dear Ahmed. So, guys, if you are not, for me, long term is bullish, and I think you're right, probably. Yeah, it is. You're absolutely right. That's the daily chart. It's been to the upside since the whole year, basically. and all these dips, correct. And I think we have a kind of a Andrew's pitchfork over here. It looks like an Andrew's pitchfork. Let me just. It looks like an Andrew's pitchfork. Oh, yeah, a channel. Let me simplify it for you because not a lot of people know about Andrew pitchfork. But look at that. Up, correction, another. Basically, wave one, wave two, wave three, wave four. No, it's not an Elliott wave. No. It doesn't satisfy an Elliott wave, but it's a clear upwards channel. Corrected, breached the bottom of the channel, rebounded, did another higher high correction right now. So a dip below this level could bring the asset down here or retesting the bottom of the channel again before another potentially another rebound to the upside. But yeah, overall I agree with you, dear Ahmed. It's clear upwards channel. I mean, it's the last nearly 6 months. 6 months. So guys, if you don't have any questions, I'm gonna have to call it a date because we have been live for more than an hour. Got a bit tired. Don't know whether I've missed anything. We spoke about stock market, we spoke about the dollar, about gold. Oil has been to the upside. However, with all this geopolitical tension still on, because of this, however, we have seen some like mixed performance today, down, up. It's ahead of the OPEC Plus meeting as well, which is um, in the during the weekend. This is a daily chart just for you to set this trend line on. Okay, it's like an inverse triangle because it has been ranging in May. Okay, that will be helpful later on. These trend lines could be helpful later on. For the time being, it has been to the downside the last 2-3 days in a row, rebounded earlier this morning, and ahead of the OPEC Plus, which is on Sunday. We could see oil, however, by considering the fundamentals, we could see oil resuming its gains. But considering that OPEC Plus is expected to proceed with the output cuts. So what is reported, what has been reported today today from Bloomberg is that OPEC Plus are finalizing, let's say, an agreement to extend output cuts, right? And this is about to happen in June 2nd, basically on Sunday, right? Sunday, yeah. So um, so yeah, so we have seen some fluctuations in May, a lot of because of the geopolitics as well, but the cuts could support further the oil overall. What else about the oil? What else? Uh, Intraday rebounded. The next immediate support level is at the previous bottom at 78.70. 78.70 and 79.40 are the next resistance level. However, it already looks that this is looking already limited, so we could see a retracement, and another lower high over here. Uh, yeah, ECB is something that you should keep an eye on next week for sure, because it's all this done deal that we're expecting for the ECB to be the one of the first one of the first banks to proceed with the rate cut. Usually ECB was following Fed, but this is not the case this time. We're sure that Ms. Lagarde at least will try to calm down the markets or to keep a balanced statement. But based on the data, it seems that it's time for them to proceed with the rate cut. Yeah. If there are no further questions, I'm gonna call it a date, as I already mentioned. So as we have seen, actually this is now the US market opens right now, right? In 3 minutes. It will be very interesting to see. Okay, we've seen that it has been rebounded. The stock market has found some support on the release, because I said fundamentals are supporting the stocks if indeed they continue to suggest an earlier easing from the Fed. But it's very important to see how Trump will affect it, how Wall Street will react on Trump's case. So yeah. So whether this rebound is limited or not, or whether we're gonna see further correction, at least an intraday one. Nonetheless, guys, I'm gonna call it a date. I can see that there are no further questions. Let me check the news where this is anything other than that. So dollar under pressure after the data. Continue actually, come on. Extended to the downside. So bearish dollar, positive bullish gold intraday with 2362, 2365, the next key resistance levels. A bit overbought, however, intraday, so we might see some consolidation around that territory. Stocks rebounded, but overall under pressure this week due to the U.S. license restrictions. All the rest of the US pairs are benefiting on the dollar weakness. Pound Swiss, the one that we covered earlier, overall in a bearish market. Intraday, however, a bit of a correction that is already has already ended. And oil, a very, very mixed, messy performance within, where is oil? Within, as I said earlier, within a fluctuating the whole May. Everything will get a bit clearer after the Sunday's OPEC Plus meeting, which is expected to support the US oil. That's pretty much it, guys. Have a great day ahead. Take care. I'll see you again next week. Okay? It's a very, very busy week ahead. Very busy week ahead. Thank you.